Okay, so we are now proceeding by preparing these control accounts, the receivable ledger control account as well as the payables ledger control account. So we are going to read through the question there. As you can see here, they are saying, this is question 5. At the close of business on 31st December 2024, the following balances were extracted from the books of Takombra, a limited liability company. So we are being given here at the close of the year. We are being given these balances. The balances for the receivable ledger control account. This is 95,200. So that was the example that I was given there, that I was giving in the previous clip. I said this 95,200. You need to know to say this 95,200. This is the amount that we sold goods on credit. You get. So let's assume maybe we sold something to Mr. Paul, we sold something to Mr. Banda, as well as to Mr. Zulu. So when we add up that amount, it should give us this amount that you are seeing here, which is 95,200 for the receivable. Okay, aba ni bankongole watu. These are the people, these are the customers or the people who bought goods on credit from us. Okay, so this is the balance for them now. So now we want to add up anything that will increase this receivable balance, and we are going to deduct everything that will do what, that is going to decrease this receivable balance. So we are going to add what increases this receivable balance by doing what? By recording on the debit side of the receivable control account. Okay, so these control accounts, they are also a T format form. There is a debit side as well as the credit side. So the debit side, this is where we are going to record this figure here for the receivable. So anything that increases this figure, we are going to record on the debit side. Then anything that decreases this figure or that reduces this figure, we are going to do what? We are going to record on the credit side. Okay, so that is it there. So we are being given receivable ledger control account. This is the figure, which is 95,200, as you can see here. Payables ledger control account, we are being given 74,800 there. Then they are saying during the year 2024, the following transactions occurred. Okay, so these are the transactions that occurred, as you can see here, 1 up to 10 there. So number 1, we are being told cash received from customers, that is 63,600. There is cash paid to supplier there. There is also sales on credit. There is purchases on credit. There is sales returns. There is purchases returns. There is discount received from suppliers. There is settlement discount claimed by supplier. There is also recoverable dates written off. There is customer and supplier accounts settled by contra, setting off, as you can see there. Okay, so what we do, we quickly go to requirement number 1 there, as you can see. So they are saying prepare the receivable ledger control accounts for the year ended 31st December. Okay, So how do we prepare this receivable ledger control account? Okay, this is actually what we are supposed to do. As you can see here, the name of this company, it is what? It is Takombwa, a limited liability company. So we need to indicate the name of the company here. We say Takombwa Limited Receivable Ledger Control Account. So as you can see here, you pick the balance brought forward, which is 95,200. So you are going to get this figure where you're going to get it from these balances that we are being given here. So the closing balance for the previous period, that is the balance that we are going to start with as at now in this period. So that is it. That's the reason why we are recording the same balance brought forward for the previous period. Here it will be the brought forward. Okay, so we are going to debit anything that increases this balance, and we are going to credit anything that reduces what? The same balance as well. Okay, so that is it there. So we are going to go step by step of these transactions that we are being given and capture items that are supposed to be recorded in the receivable ledger control accounts. Okay, so that is it. So we are going to start with transaction number one. Transaction number one, it says cash received from customers. What happens when we receive cash from customers? Okay, so what happens when we receive cash from customers? So what is going to happen when we receive cash from customer? Does it going to increase the receivable balance, or it is going to reduce? Of course, it is going to reduce the receivable balance, because some other customer, they've paid us money. So they've paid some monies to us. So of course, money is going to do what? I mean the receivable figure bankongole watu wazachita reduce because the others have done what? They've paid us the money. So we are going to record this on the credit side of the what? Of the receivable ledger control account. So as you can see here, the cash received, we've recorded on the credit side to reduce from the debit balance there. Okay, so that is it. We move to the next transaction. Cash paid to supplier. Like I said, supplier, they go with the payable ledger control account. So supplier, it's connected with the payable ledger control account. So that is it. So this one, it is not going to be dealt within the receivable ledger control account. It will rather be recorded in the payables ledger control account. So transaction number two, we leave it for payables ledger control account. So we go to transaction number three. Transaction number three, it says sales on credit. Okay, so that is sales on credit. How do we deal with the sales on credit? Does it increase the receivable balance, or it reduces? You get? So it's about, this is about just the increase or decrease. Does it increase the receivable balance, or it reduces the receivable balance? If it increases the receivable balance, meaning we record on the debit side. But if it reduces the receivable balance, then we are going to record on the credit side. So in this case, sales on credit, meaning we are adding more sales on credit. So meaning the receivable balance, it is going to do what? It is going to increase. So of course, the sales on credit, we are going to do what? We are going to debit. Why? Because it increases the what? The receivable balance. So that is it there. So as you can see here, we did what? We debited the credit sales here, which is 96,400. Why? because it increases the what? The receivable balance. Okay, that is it. So we can move to the next transaction. So next transaction, it's number 4 there. That is purchases on credit. So as you know, I said payable, it goes with purchases stuff, and it goes with the suppliers. Then receivable control account, it goes with the sales and also the customers. So that is it. It is the relationship of the, yeah, that is it there. So purchases on credit, it is going to be recorded in the payables ledger control account. Then we move to the next transaction. We have sales retains. So how are we going to deal with the sales retains? Sales retains. We've sold goods on credit to customers, meaning the receivable balance increases. Then now, someone has brought in back the goods that we've sold on credit to them. So meaning the receivable balance is going to do what? It is going to decrease. Why is it decreasing? Because someone has retained good to us. So if we had the 100 kwacha goods that we sold on credit, then someone with goods worth 10 kwacha, he has brought them back to our business due to some reasons. So it will no longer be 100, it is going to be 90 kwacha. So it means that it reduces the what? The receivable balance. So we are going to credit the retains inwards, which is the sales retains in this case. So sales retains, we are going to credit the 38 because it reduces the what? The receivable balance, as you can see there. So you go just like that. You keep on going. So we go to transaction number 6, purchases retains. This purchases retains, it is going to be recorded in the what? In the it is going to be recorded in the actually it is going to be recorded in the payables ledger control account. Yes. Okay, so we can jump that one. We go to transaction number 7, discounts received from suppliers. Okay, discount received from suppliers. So this discount received from supplier, it doesn't also affect the what? It doesn't affect the receivable ledger control account. So we are going to record this in the payables ledger control account. So what I'm going to do actually, for the sake of you to be able to understand the control accounting easily, I'm going to send you the format for the receivable ledger control account as well as the payables ledger control account, so that you can master and understand it. Okay, so that is it there. So we can proceed. We go to we were on transaction number 7 there. We said it's going to be recorded in the payables ledger control account. So we go to transaction number 8 there. We are being told to say settlement discount claimed by customer. So when a customer claim for a discount, meaning it's us who is allowed to give that discount to that particular customer. Okay, so when we allow a discount, meaning we are losing out. Let's assume maybe here it's a product we are supposed to sell it at 50 kwacha. Then someone comes and buys goods in bulk. Then instead of doing what? Instead of selling those products 50 kwacha each, so we are going to negotiate with that customer in the let's let's assume maybe we put it at 45 kwacha instead of 50. So meaning it's more like we've lost a 5 kwacha. You get. So that is it. So the discount allowed, it affects the what? The receivable ledger control account balance. Okay, so it affects the receivables balance. So it is going to be recorded on the credit side as well of the what? Of the receivable ledger control account. So as you can see here, discount allowed on the credit side there, so that we reduce from this balance that we have on the debit side. So that is it there. Then we come to transaction number 9 there. We are being told to say irrecoverable debts written off. So irrecoverable debts written off, irrecoverable debts, these are the debts that these are unpaid debts. Okay, when we discover to say maybe amongst those receivables or those creditors that we have, someone isn't going to pay us money due to some reasons. Okay, maybe that person has gone out of the country, or maybe that person has died, or whichever reason. Okay, so meaning that person isn't going to do what? Isn't going to pay us money back. So does the receivable balance going to increase? No, it is not going to increase. Why? Because that person, we know to say that person isn't going to do what? We know to say that person isn't going to do what? Isn't going to pay us money. So it is going to reduce the receivable balance, as you can see there. So it is going to reduce the receivable balance. So irrecoverable debts, we are going to record on the credit side of our receivable ledger control accounts. Okay, so that is it there. So we go to transaction number 10. Customer and supplier accounts settled by contra setting off. So as you can see here, this is the contra item. How do we deal with the contra item? The contra item, whenever you see this in the control account, you need to bear in mind to say this is the relationship between a customer and a supplier. Okay, so let's assume I'm doing business, then I'm supplying goods to someone. Okay, so let's assume that someone needs to owe me money with an amount of 100 kwacha. Then even that person, he's also a supplier to me, and I also need to owe him 100 kwacha. So what is going to happen? Are we going to say, no, you send me 100 kwacha, I also send you in the 100? We are not going to do that. Okay, so we are just going to set off that what? That credit. So we are just going to say, my friend, you can keep that money and I also keep mine, so that we cancel off the what? The debt. Okay, you both have credit to each other. You need to owe. You both need to owe each other with the same amount. So it is going to be set off. So you're going to set off that date. Okay, so that is it there. So now what happens now to the receivable ledger control account? How does it affect the receivable control account? So is it going to increase the receivable balance, or it is going to reduce? Of course, because it is going to reduce the receivable balance. So it is going to be recorded on the what? On the credit side of the what? Of the receivable. So the contra item, it is recorded on the credit side of the receivable ledger control account. And in the payable ledger control account, it is going to be recorded on the debit side of the what? Of the payables ledger control account. So that is it there. So as you can see here, we've recorded it, the contra item, on the what? On the credit side. Why? Because it affects the receivable balance. It affects the receivable balance. That is it there. So the next thing that we do, we add, we look at the before the balance carried down there in this receivable ledger control account. What we do, we just add the debit side because it's the one which has got the bigger amounts than the credit side. So we add these two and it will give us this figure, which is 191,600, okay, as our balance on the debit side. Then also the credit side will have the same what? Will have the same balance as well. Then what we do, we are going to add cash received 63,638,600, 5442. Then the amount that we are going to find, we reduce from the what? From 191,600. So in this case, we are going to say 63,600 plus 38 plus 600 plus 54 plus the contra item of 52. It is going to give us 77,600. Then we reduce this 77,600 from 191,600. Then it is going to give us 114,000 as our balance what? Balance carried down, which is going to be the balance brought down or the balance brought forward in the following year or in the following period. Okay, so that's how we are supposed to prepare the what? The receivable ledger control account. So basically, the receivable ledger control account, it deals with the customers. Okay, it deals with the receivables and it deals with the sales. So you need to connect yourself into those items as you are preparing the receivable ledger control account. Okay, hope this information, it has been helpful to you. So in the next clip, I'm going to explain on the payables ledger control account. All right, bye.